Hello students. In this video we will be discussing about treatment of profits and losses and balance available in profit and loss account, that is known as your surplus and general reserve, how to treat them. After discussing about goodwill and treatment of workman compensation reserve and IFR, investment fluctuation reserve, the next point is how to treat accumulated profits or losses and general reserve. So listen very carefully that reserve and surplus or accumulated reserve. Accumulated is the sum of the profits that the firm has earned over the past few years or during the previous years. So that will be known as your accumulated profits. What will be accumulated losses? Accumulated losses will be losses incurred in that previous years. So if a balance sheet shows profit and credit balance, that is if the profit and loss balance shows in the credit side of, that is on the liability side of the balance sheet, that simply means it is a profit. So I am writing over here, if it is like that, profit and loss statement, it is credit, it is given as credit, this means it is your profit, this is your profit. And if it says like profit and loss and it is debit in nature, sorry, it is debit in, it is written as debit, that means it is your loss. Normally this is shown in the balance sheet liability side and this is shown on the balance sheet asset side. Okay, so be careful. So another type of loss, that is your advertisement suspense account. Advertisement suspense account, suspense account. So this is also your loss and this will be also available on the balance sheet and asset side. So these losses are to be written off, that means it is to be recovered from the old partners in their old profit sharing list. So the next comes is your general reserve. General reserves are those reserves which can be used for any purposes and this will be available on your balance sheet liabilities side. Okay, so now what we have to do, now we have to distribute all the profits and write off all the that is fictitious assets like your profit and loss, that is debit balance in profit and loss account and advertisement suspense account. So we have to write it off. So what entry we will be passing? If it is to be recorded, if that means it is not to be recorded in the next balance sheet, so that the entry or that the account will appear, the entry will be passed if it is to be recorded like that. So surplus in statement of profit and loss account debit, general reserve account debit to partners capital account or to partners current account if there is profit. In case of loss, the reverse entry will be passed, the reverse entry of this will be passed, this will be go there and from this place it will come here. So we have to be careful. Okay, if it is not to be recorded, then what to do? If it is not to be recorded, then we have to, that simply means the same value is going to be appear in the balance sheet even after the reconstitution of the balance sheet. So in that case we have to find out gaining ratio and sacrificing ratio of the partner and we have to sum up the values, the exact values, and then the share of gaining partner and the debit and credit and sacrificing partner, and we will be passing the entry gaining partners capital account debit to sacrificing partners capital account. This entry will be passed. To understand it more clearly, we will be going to an example where we can see how to pass these entries. Okay, so let's look at this question illustration. It is from your book only. It says that XYZ are partners sharing profits and losses in the ratio of 5:3:2 and they decided to share future profits and losses in the ratio of 2:3:5 with effect from 1st April 2018, with effect from 1st April 2018. Okay, so the thing is that general reserve appears 75,000, workman compensation reserve appears at 12,500, and advertisement suspense account debit, that is your 50,000, and profit and loss credit 37,500. And we have been asked to pass necessary journal entry. So we will be moving to the solution part. Okay, so let's go to the solution part. So this is your according to your what has been told in our question like that, and it is nothing to be sure that the following items appear in the balance sheet, and it has not been said like whether we have to record it or not to record it. In that case we will be assuming that we have to pass adjust that we have to write it off or we have to distribute it. That means we will not record it in our balance sheet after reconstitution. So the thing is, when it is to be written off or it is to be it is to be discount it is to be distributed. So the same question will be, we will be doing in both the way, that when it is to be recorded, then what entry we will be passing, and when it is not to be recorded, then what entry we will be passing. So first of all, we have been given with the general reserve, so I have distributed general reserve 75,000. It has been given to us, and 5,000 has been distributed among the partners in their profit sharing ratio. So I have written like 75,000 to X capital account, to Y capital account, and to Z's capital account. And the profit sharing ratio, we know that it has been given as 5, 3 and 2. So we have done like this, and so 75,000 has been distributed in the profit sharing ratio among the partner. Okay, so next, the profit and loss account, it was also given to us. So what was the use of profit and loss account? But the profit and loss account was given as a credit balance, remember. So in order to write it off, we need to debit it. So when we will debit it, the thing that profit and loss account will be debited by 37,500 to X capital account, to Y's capital account, and to Z's capital account in their old profit sharing ratio. So you can divide it, and it comes to 18,750, 11,250 and 7,500. The third comes your workman compensation reserve, and in that question, in our question, we have not been given with any kind of claim against workman compensation. So the entire amount is to be distributed among the partners in their profit sharing ratio, in their old profit sharing ratio. Remember, old things are to be distributed among the partner in their old profit sharing ratio. Old amount, old items, old partners in old ratio. Okay, so next and the last one is your advertisement suspense account. That is your loss, that I told you earlier, that advertisement suspense account will be your loss, or any other thing that is profit and debit balance in the statement of profit and loss, that will be your loss. So loss is to be written off in the in partners, through partners capital account, and use and by using old profit sharing ratio. So 50,000 we have distributed, we took 50,000 from X, Y and Z in their old profit sharing ratio. So old profit sharing ratio will remain in active all the time. Remember one thing, first entry, second entry and the third entry, this is the all the three is our profit, all the three is our profit. So this all can be clubbed together: general reserve debit, profit and loss debit, workman compensation account debit, 2X, 2Y, 2Z. The entire amount, the total amount of this, that is 50,000 and 1,25,000 will be distributed in this ratio. So you can do in whatever. You have also learned that how to club the entries. So you can use here clubbing of entries. Okay. So now I hope that the things is clear, that how to pass necessary journal entry in case if it is there. Okay, so now we will be moving, if these values are retained in the business, if these values are retained to be in the business, or it is to be recorded after the reconstitution of the balance sheet, then in that case what we will do, we will have to find out the adjustment value or adjusted value. For that case, all the profits are added together, profit and loss, general reserve and WCR, these all are your profit plus items. So we have debited it, that is your credit item, or we can also say like that, credit item. And advertisement suspense account, 50,000 rupees has been deducted, so the net profit comes to 75,000. Now we have to find out the gaining and sacrificing partners. So X, Y and Z, we try to find out gaining and sacrificing ratio. So by deducting old ratio, new ratio from old ratio, we found out X is sacrificing 3/10 and Z is gaining 3/10. So what we will do, we will multiply this 3/10 into that net value, that is your 75,000, that comes to 22,500, So this 22,500 will be given to X, and it will be taken from Y, sorry, not from Y, it will be taken from Z. So we have to be very careful. How I did, I just added profit and loss account, credit side balance, general reserve, then WCR. The total comes to be 1,25,000. After that, I deducted 50,000 as loss. So net profit comes to 75,000. Now after 75,000, I have to find out, after getting that net profit, we need to find out gaining and sacrificing ratio, because we know that entry for adjustment entry we need to be using like gaining partners capital account debit to sacrificing partners capital account or current account. So x, we when we calculate it, then it comes to 3 by 10 for x sacrificing ratio, and for z it is minus 3 by 10. So what we did, 75,000 was multiplied by 3 by 10, it comes to 22,500, and this 22,500 will be taken from z and it will be given to x, because x is sacrificing and z is gaining. So the entry I passed like z's capital account debit to x capital account, okay, being adjustment entry done. Now I hope that it is giving you the clear picture of how to approach to all these things if it is given in a particular question. Okay, so now we will be moving to some another question, and there we now look at this question. There are three partners x, y and z. Again the name will remain same, x, y, z, a, b, c, ram, mohan, syam, like that only the name will be. And so x, y, z are sharing profits and losses in the ratio of 5:3:2. They decided to share future profits and losses in the ratio of 2:3:5. So the profit sharing ratio changes with effect from 1st April 20. So they also decided to record the effect, and in that case the reserve, general reserve, was appearing in the books at the rate at 6,000 rupees profit and loss, credit balance 24,000, and advertisement suspense account 12,000, and we have been asked to pass adjustment entry. So now it is clear that we have been asked like this, but in the earlier question it has not been asked like that only. That means in that case we have to write off, and in this case we need not to write off all these things. That means while passing journal entries, the name of general reserve, profit and loss account and advertisement suspense account won't appear. So we have to find out the net effect value. Okay, now move to the solution part. This is our solution part. Here I have calculated and passed. So let's go for that working note, and let me take my pen out, then only we can. Okay, so now the first thing, because we have to pass the adjustment entry, so now the first thing is to find out the gaining and sacrificing ratio. So I try to find out the gaining and sacrificing ratio. It comes to x, y and z, and 3/10, and that is old is 5/10. 5/10 minus 2/10 is the new one. So the sacrificing ratio for x comes to 3 by 10. For y it is 3 by 10 minus 3 by 10, so nothing is there, and for z it is 3 by 10 is gaining ratio. Now we have to find out the net effect of that accumulated profits and losses. So general reserve we have been given with the 3,000, plus we have to add the profit and loss account because the credit balance is there. If the available balance in profit and loss account is debit, that means that is loss, and loss is to be subtracted. And then is your advertisement suspense account, then it's your advertisement suspense account. Okay, so the total comes to be 18,000. The total comes to 18,000. So we have to find out the share of x, because he is sacrificing 3 by 10 share. So how much he will gain? So the share of x is your 3 by 10 into 18,000, that comes to 5,400. So net effect we have to pass. So it is to be paid by z. So what we will do, we will take from z. Taking from z means we will be debiting z's capital account, and it will be credited to x capital account. Z's capital account debit 5,400 to x capital account 5,400. Okay, let's think of a situation when if this net effect comes to be negative. Net effects comes to be negative. Suppose the advertisement suspense account in this case is 1 lakh rupees, then the balance, the net effect will come in negative balance. Then what will be our journal entry? In that case journal entry will be reversed. Then that will be, if net effect is negative, then journal entry will be reversed. Then what journal entry we will pass? In case of positive we are passing gaining to sacrificing. Now we will be passing sacrificing to sacrificing partner's debit to gaining partner, to gaining partner. So the thing will be like this, and the treatment will be like this only. So in the next video we will be discussing about how to open revaluation account, and how to find out profits, and then how to prepare that balance sheet of that company after of the partnership firm after reconstitution of the partnership. Okay, so hope you are getting all these things.